And now we're moving on to ArcelorMittal South Africa operates steel producing plants throughout the country. Market cap here of 5.7 billion rand. No PE, paying no dividends. Let's get the share price graph up.
Yeah,
and there
it's
we
a pity
have
we can't show a
context.
10-year chart because that would even look more insulting. But unfortunately, this company has really battled. Remember, it's still controlled by the global ArcelorMittal family, but it's got the steel producing plants in Newcastle and Vanderbijl Park and Saldanha. But it's been through a lot of trouble and it's battled because steel demand in South Africa is weak and there's lots of imports.
Paul, your thoughts? Could this be, now remember the start of our conversation, we looked at Anglo-American at that 63, 65.
Yeah, good
We've
question.
spoken about Old Mutual. Could this be another play?
I think if you know, you can't look at it the same in terms of a commodity recovery, I don't think, or resources recovery. It's got structural problems, it's got a lot of debt, it's hemorrhaging money. I mean,
isn't that what they said about Anglo-American?
They did, but the difference, I think, is Anglo-American, you know, the play there is the rising commodity prices. Here, that's not really going to help ArcelorMittal. If anything, it's going to impact their margins. And they've already had margin squeeze in the last results. I mean, they released results last week, and R1.48 headline loss per share. So not great.
How about shorting this one?
I wouldn't short it either. So if you're going to... So, you know, this is one of those ones you could maybe take a punt on it and leave it in the drawer for 5 years and see what happens. You know, if they do come right, you're going to make tons of money off it. But not a risk I'm willing to take at the moment. I think it's a lot more risky than Anglo was at the same, you know, back when Anglo was having its worst days.
Paul, would you agree?
Well, look, I mean, their main customers over the years have been infrastructure projects here in this country and the mines. So capital spending in the mines is not good because of the mining charter and worries about all of those issues.
And the construction
industry, we know, like we said, there's one or two isolated, really big things going on, but everyone else is sort of grumbling and moaning. Eskom is slowing down because, you know, they've almost ended up with overcapacity again. It's hard to say.
But let's take into account putting it into your bottom drawer.
Is trying to get the government to give them tariff protection for imported steel products, which is difficult because, I don't know, I mean, if your business case depends on how much help you're getting from the South African government.
One thing that might help them is...
I'm all for a free market.
One thing that might help them is lower production potentially in China. They're worried about environmental issues there, so that potentially could help them. But yeah, this isn't a play on the global recovery. This isn't a play on 3.5% global growth. You know, this is a play on South Africa, and it's a bit of a different story at the moment. So yeah.
Not much to get excited about here on home ground.
Operational difficulties at some of those plants, you know, either furnace blowouts or, you know, safety concerns and all sorts of other dramas. And I know that's unfair because, you know, all you need to do is have 6 months where you don't have those and you all start looking better, but they've had many problems over the years.
You're going to call it first, Paul Theron?
No, I don't think so, not hot.
Yeah, I'll go not on this one too. Not worth the risk at the moment, but potentially in the bottom drawer.
All right, potentially in the bottom drawer, although we're not hot on it. Let's have a look at the calls that Paul and Paul